Good evening, everyone. My name is Paul Young. I'm just going to walk you through the world market outlook, so economic trends, kind of look at specific issues facing some countries like Canada, the US, China, as well as some comments overall about the global economy. Now, my presentation is just one perspective of the view. It's not deemed to be the only perspective, so bear that in mind. You're more than welcome to go out to the IMF, OECD, different bank sites to get a kind of their perspective on what's going on with the trends, whether they're economic trends or whether they're market trends in terms of equity markets, to get an understanding of what's going on. Now, my agenda will be is I'll talk about Chinese debt. I'll talk about Latin America, the economy there. I'll give you an insight what's going to likely happen with the retail sales numbers that are being released in the US for April. I'll talk about Canada trade deficits and what's going on in the trade area, and I'll give you a look at automotive. Now, one of the big things that people generally do not understand, because sometimes we don't get a lot of details around what's going on in China. Now, China has a debt issue. To what extent it is, it's not necessarily known. Their debt to GDP is still about 40%. That's roughly about where Canada is in terms of its debt to GDP. But what you need to understand is the bottom line here is corporate debt is a big issue in Asia right now. Now, that could be stemmed from a couple different things. A, they might have been raising capital to expand their capacity, or they could have used debt, as we call as leverage buyouts, to buy acquisitions or buy companies or invest in foreign markets. That's something to bear in mind, because debt is an issue. We ran into that in the 90s where there was a lot of leverage buyouts and we had to see a lot of restructuring in terms of the debt to equity ratio, so it's something to bear in mind. The second point that's not brought into play is also that Chinese economy is growing at a slower pace, which means that's a lot of pressure on policies what China can do in terms of supporting its economy. One of the things that they are doing as part of combating stuff is they're pulling back capacities. So we've seen sectors like steel and some other sectors basically see where they're downsizing those sectors in terms of taking the capacity out of the marketplace, which then puts more people on the unemployment lines, and that's something to bear in mind as you watch as you go forward. Now, Latin America it's almost like feast or famine with them. Either they go like gangbusters or they're basically in recession. And one of the biggest economies in Latin America is Brazil, and it struggles. It's basically in a recession now, and you'll see that with this chart now. And it's projected to be in a recession this year, and it's going to only have almost flat growth in 2017. And Brazil's a critical driver of the Latin America economy, especially in South America, and when we get into Central America and into Mexico. So it's a critical driver there. Now, on the right-hand side of this chart, you're actually seeing Canada's trade. So Latin America, now I don't have stats for Chile or Colombia, but the big three countries there, they account for about 2% of about roughly of our exports. And that's to bear in mind. So if you're seeing sluggish growth there, that's going to impact on our exports going there. Now, we import a lot of it, and if you look at it, we've got a huge trade deficit with Mexico that needs to be worked on to try to reduce that trade deficit. And that's something that needs to be as part of a government strategy as we work with the NAFTA countries. Now, one of the key drivers of the U.S. economy is retail sales. 2/3 of the GDP growth is based on retail sales. The last 2 months we've seen sluggish growth or a little bit marginally downturn in retail sales, which will impact the GDP. They're predicting in April that they're likely to see another decline in retail sales. How much impact, they're not sure yet. Automotive sales are still quite strong, but we've seen a clawback the last 2 months in terms of that. In terms of automotive sales in the US. Now, they account for about 21% of retail sales, so any drop in automotive sales will actually impact retail sales overall. We've also seen a price at the pump impact the gasoline prices. We've seen a recovery of around 8% into April, so that's impacting consumer spending as well, and that'll impact the trends. But major retailers are saying they're seeing a little bit of sluggish growth in retail sector, and it's something to bear in mind as you're watching the trends as you move forward. Canada depends on trade. In the last 2 months, we've seen a considerable drop in exports, which more alarming is about 70% of our trade or exports go to the US. And we've seen a closing of that surplus significantly in the month of March. So in other words, the demand for Canadian goods in the US, which is driven by retail pricing or retail sales, has been sluggish. And that's something to bear in mind, because as they move forward with the trade strategy and we don't have the new trade agreements kicking in and we have slow economic growth, there's going to be pressure on exports. The far right hand side shows you that the bulk of where the trade deficits lost compared to the same period last year on average is energy. But we've seen an uptick in motor vehicle sales, forestry, consumer goods. So we've seen that those sectors rebound quite a bit. Now the key issue will be, is the trades the last 2 months an anomaly, or are we seeing a downturn in the export market? There's a lot of global pressures on in terms of global growth. We're seeing sluggish growth. We've also seen an impact now that's not reflected in these numbers, the forest fires out in Fort McMurray. Fort McMurray is a significant player in the energy market. That'll impact capacity or oil exports, which could have a significant impact on our trade deficits and our exports. And that's something to bear in mind as we look at GDP going into the second quarter. Automotive, which is a key driver in North America, it looks like marginally that we're going to see production up year over year by 600,000 units. That's not very much. That's probably only about a 1 to 2% growth. So we're seeing that over the past few years we've seen significant growth on average. We're seeing a little bit of slower growth in automotive, which makes sense. When you start talking big ticket items, they tend to be spikes. And that's what we're seeing with automotive. So we may be seeing a clawback here, and it's something to bear in mind, because 21% of the retail sales, both in Canada and the US, kind of are accountable by automotive. So an automotive sector shows you people are spending money. So it's something to bear in mind as you look at the trends, and especially with retail sales, because in Canada's case, they had a banner first 3 months, a significant growth. But I would expect that growth to come back to reality over the next 9 months, where we likely will see retail sales grow in Canada about 1.5 to 2.1%. And that's significant, because right now in the first quarter we've seen almost like a 6% clip in growth. So that's showing you we're seeing about 4% drop over the rest of the year. That will impact GDP, because GDP is driven by retail sales and consumer spending. So these trends are kind of give you an idea that we're in a market that's unstable. There's a lot of instability with that market. That being said, you need to watch your trends, watch your portfolio, because as you're looking at market trends and looking at your returns on your investments, you'll likely see a lot of pressure on those investments this year, just due to the low commodity prices and low economic growth worldwide. So there's going to be pressure on companies to keep that profitability up by looking at different ways to manage their costs. And that's something to bear in mind as you move forward, as you watch the trends. Thank you.